Good morning, guys. Ooh, there is so much red out there. Let's see what's going to happen. It's getting interesting. All right, guys. Good morning. Welcome to the show. You guys know there's a lot of red. Let's see all the red. I'm going to do a refresh right now, and let's see what we got. Dow is down almost 1%. S&P is down 1.25%. NASDAQ is down 2%. So before I get started today, somebody in my Bid and Ask Nation yesterday sent me a little YouTube live stream yesterday going into the market close, and there was a guy that was drinking his sorrows away because everything was crashing, and I felt bad for him. So it's 9 o'clock in the morning, but I'm gonna start drinking myself in celebration for everything that's happening right now, because this is what happens when you get valuations that are well beyond. Here we go. Where are we at? Some scotch. When you get valuations that are wildly beyond what is supposed to happen, this is what we got. And the glasses I need because the red is blinding my eyes. So I have to wear glasses today. And let's move on. So let's go and see. Guys, I'm not convinced that this is going to hold. I do think the Daddy Fed will come to the rescue, and they're going to come out and have some emergency meeting and this and that, and we're going to fix things and blah, 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 blah. But we'll see what happens. Let's blow this up. Stocks fall. Europe falls. China falls. Everybody's falling. The Nikkei out of Japan falls. So every constituent. Hold on, I got to get my bottle of booze out of the way. It was in front of my screen. Every constituent of the three major indexes, London, Paris, Frankfurt, was red in the early session. So as we know, the Ariel, I don't drink. This is for people that come to my house. I'm not really doing that. The Nasdaq was down 2.5% yesterday, which is wild. It's funny. They keep talking about this concern about inflation. All of a sudden, inflation is what matters now. Previously, it was what's going to happen with the interest rates, and now we have interest rates that are. I'm going to show you the 10-year, and the 10-year is dropping. So it's really interesting that what was news before is not really a concern now. So let's keep going with this. U.S. inflation. So this number comes out on Wednesday. It's the Consumer Price Index, CPI is what they call it. And I'm excited to see what that number shows. And frankly, I don't really care about what the number shows because the number is going to show what it shows. I'm more excited to see what the reaction is going to be to that number. Because remember what I told you yesterday, we are in a very emotional market and it's a confidence game right now. And whatever confidence happens is, whichever way the overall consensus of confidence goes, this market is going to go. The Fed is losing control. You know what? The Fed may be, so Warren Buffett said in his annual meeting, he said, economics is not a thing of let's do one thing and move on. He says, you do something and then you say, what's next? And that's the situation that the Fed has put themselves in. They have gone on to do this for years and years and years on end. And all of a sudden, maybe they're out of tools. But interestingly, I can't remember which article I highlighted, but and you can see all these different sectors that were wildly down. I can't remember which article it is, but we are seeing, maybe it was this one. We are seeing, let's see, we're seeing, here we go. A weaker than expected jobs number report on Friday boosted optimism that the government and the central bank are likely to continue with their supportive policies. Guys, they've done it. They've done it over and over and over for years and years and years, and almost, I mean, you can argue that it's been a decade, and they're going to keep doing it. Good or for bad, they're going to keep doing it. So let's go to the story that literally melted my brain this morning. Biden says this. So this comes after. Remember, I went on this kick. I don't know if it was Thursday or Friday last week about South Carolina. And guys, I don't care about the politics of this, but we're coming at. I guess we have to mention that it's the Biden administration, and they're the ones that are really promoting. I shouldn't really say that. The Trump administration did the same thing about just pumping tons of money. I mean, frankly, the Trump administration did $12.2 trillion of stimulus, but who's counting? So. I'm just shocked. I was absolutely shocked by this. Biden administration will remind U.S. states this week that any unemployed American offered a comparable job must take it or risk losing unemployment benefits. So after everybody was just bashing South Carolina and Montana last week, all of a sudden the White House comes out and says, oh, well, maybe they were onto the right thing. And it's because the jobs number came out over 75% less than it was expected. So he's also directing the U.S. Labor Department to work with states to reinstate requirements that those receiving unemployment benefits must demonstrate that they are actively looking for work. He said, quote, if you are receiving unemployment benefits and you are offered a suitable job, you can't refuse that job and just keep getting unemployment benefits. This story is literally blowing my mind. I just can't believe that. Not woke. Record number of small businesses can't find enough workers to hire. So this was interesting coming out. This is the same thing rubbing off of the story from last week. According to a number of small businesses, they cannot fill open jobs in April. 44% of small businesses said that job openings went unfilled in April. That is absolutely absurd. I can't believe that. Small business owners are seeing a growth in sales, but are stunned by not having enough workers. Guys, people want to go back to work. People don't want to go back to work if they are being incentivized to stay home. It's very simple. I have multiple friends that own businesses that say, I cannot get my people to come back to work because they're making more from the government. Now, if you want to give them a one-time incentive to go back to work, fine. But this endless $300 a month through September, it just doesn't make sense. U.S. Chamber of Commerce also called on Washington to end a temporary $300 federal stipend that expires in September. And of course, we have to remember that this just passed. This just passed in April. Or was it March? March or April. This just passed in the in Congress. So they're already trying to take it back. I do agree with this statement from Kevin McCarthy. Not my favorite, but if Joe Biden had done nothing, the jobs report would have been greater and more people would have been at work. That basically says if he didn't give away money, people would have went and found a job because they need to make a living. So that's that. Let's go to this story, and I want to pull up the SPAC analytics for all the new people. Vice Media. I don't watch Vice Media. I don't even really know what it is. I know I shouldn't say that. I know it's a news network. My brother is obsessed with this news network, which is not surprising if you know my brother. Vice Media plans to go public at a nearly $3 billion merger with Blank Check. So that's interesting. Current shareholders making up 75% of ownership include this TPG Group. Can somebody tell me who was TPG Group? They were a big PE company that was investing in, I swear it was one of those, what do you call them? EV companies back that we were looking at long in the past, but I honestly can't remember. But them, Walt Disney and A&E Group and others, of course, they make up 75% of the ownership. So they're going to sell off 25% ownership of that. Let's go to, I want to go here and pull up this SPAC analytics website. So look at these numbers. This is truly incredible. Here we go. Let's go to 2016. 2016, there were 111 companies that went IPO. 13 of them were SPACs. And look at where we are now. To be honest, look at 2020. In 2020, there were 450 companies that went to IPO. 248 of those were SPACs. Right now, guys, what is today's date? May 11th? May 11th. 315 SPAC IPOs have already happened. Now, granted, we are slowing down because the SEC is going after this stuff. And I think that's a great idea. But man, I mean, jeez. Guys, it's just all these little things that just keep adding up and adding up and adding up. And we're seeing it today. What time is it? 9:10. So 20 minutes till the market opens. And boy, oh boy, this is getting crazy. So just take all of these metrics and start throwing them together, and you're seeing that it's gonna be a big something's gonna happen. Kevin is gonna drink a whole case today. You know what I really wanted to do? I would really love to send him a bottle of our tequila from our houses in Mexico on the house. I think he'll need it. So that's an idea. All right. What do we want to let's see what the futures are doing. And then I want to start going in and teaching. I want to teach you guys about we talked about the intro. When will the crypto bubble burst? You know what? I have no idea. I don't understand crypto. Frankly, I don't know if anybody understands crypto. The one thing that really impresses me about crypto is that it's been around for, let's call it a decade. It's never been hacked. And I do think that I read a little bit about that blockchain and stuff. That blockchain is like, it's interesting because let's say you want to hack Charles Schwab. You go to Charles Schwab, you hack the server, you get access to however many millions or hundreds of thousands of accounts Charles Schwab has. Now, if you go and you start talking about blockchain, you can't just go into Bitcoin.com or whatever the hell it is and go ahead and hack everybody. It just doesn't work that way. So yeah, it's nuts. But so Tesla's down 7% right now. Let's take a gander. Tesla, poor Tesla. Yeah, it's down 7% right now. Oh, and that gap happened. So day traders, it's pumping back up a little bit right now. I don't know what the overall market's going to do, but yeah. Do you want to tell us something or two about the VIX? So you know what? The VIX, I used to look at the VIX, and the problem that I started having with the VIX is I didn't know that if it was the same representation that it was back in the day. And the reason was because of all the companies that are just doing an absurd amount of stock buybacks. I think that that's manipulating that number a little bit. So that's why I don't look at the VIX as much as I did in the past. So, yeah, that's how I feel about the VIX. I mean, it's not a metric that I look at and with total confidence as I used to, say, I don't know, what year is it? 2021? I don't know, pre-2015, something like that. So that's just that's my opinion. So let's talk about the yield curve. All right, guys, with the yield curve, what exactly is the yield curve? The yield curve is the rates that come out of the Treasury Department. So they have different months that they will give you a return for lending them money. You're basically lending money to the government. The big ones that I look at are the 3-month and the 10-year. And if you ever listen to Seth, that made me laugh. If you ever listen to those on television, they're like, they talk about the yield curve inverting. And last year we had the yield curve that was inverting back in when all the chaos was happening. Yield curve inverted in 2018 when we had that big crash that happened. Well, I shouldn't say crash. That big pullback that happened. So the idea is that you're supposed to get more money if you're lending money to the government over a long period of time, the 10-year, and the 10-year is higher right now than the 3-month. you should be getting a lot more money to give the money to the government for a lot longer. It's confidence game, goes down to it in that regard. When things bad are happening out there, and let's take example of the pandemic that happened. I'm going to use red as the 10 and this is blue. So when you have the 10-year up here and the 3-month down here, and they're just moving along like they usually do, if all of a sudden it becomes more risky, as in the 10-year yield drops below what the 3-month yield is, and the yield curve inverts like in that fashion, people freak. Everybody freaks. And frankly, you should, because that means that you are saying that you are more confident in your government in the short term than the long term. So that's the yield curve inverting. So keep an eye on that. And if we go back, let's go back to in 2020. The yield curve inverted for also, when yield curves invert, the Fed comes in so fast and switches things so quickly and does whatever they have to do to revert the yield curve. It makes your head spin. Let's see, 3-month, 10-year. I just saw it, 1.57, 1.5, right here. So at the end of January of last year, the yield curve inverted. So it was you were getting more return for lending your money to the government over the 3-month period than over the 10-year period. And you can see how quickly, let's see here, it stayed inverted for a little while, and then the Fed switched it back. And here we are. And now basically you get nothing to lend your money to the government over a 3-month period. So that's that. And that's your lesson for the day. And yeah, so dads with the purpose, join the Bid and Ask Nation. Yep, 17 spots left, guys. 17 spots left, and the price goes up. Seeking Alpha is a good website. I love going there for opinions. It's just great. Let's see here. Thoughts on Hess. I can do Hess. I wish I would have found your channel a week earlier than I did. I'm stuck in a terrible hype stock bleeding out. Hey, Ryan, it's okay. We all make mistakes. The biggest thing is just learn from it. And frankly, it's going to happen. This is what I tell this story all the time. One of my biggest learning things from trading, and I think you're new to this channel, so maybe you know that I do a lot of stock trading and whatnot. I day traded back in the day, 2015, and the day that I lost $27,000 in a matter of 15 minutes is when I learned the most, and I solidified my rules, and I don't break them anymore. So that is, you just have to learn from it. You learn from your mistakes. If you don't learn from your mistakes, then you have issues. But as long as you're learning from your mistakes, you are going to be perfectly fine. And you found us now. I'm sure you have a long life to live and a lot of money to build. So, Planet Fitness. This guy has been asking about Planet Fitness for PLNT. Oh, this is the new guy, World Weightlifting. He just found us. So, Planet Fitness or World Weight. Oh, he just joined the Bid and Ask Nation too. Awesome. So, ask me this question in the Bid and Ask Nation Discord chat. Downtrend right now, guys. You're going to see this a lot. You're going to see a lot of downtrends in this market, and you're going to see a lot of stocks breaking under moving averages. It is going to be a very interesting ride. That's all I have to say. When do I know to take my loss, Nicholas? I have done tons of seminars on this in the Bid and Ask Nation, so join them, rewatch them, and of course, if you have more questions, go ahead and ask me. What do I think of shorting ARK? Just because we've had a bad day yesterday and a little bit of a down day today, I'm not confident that this is going to continue. I give it a couple days. I'm going to be the next Buffett by the time I get through all the mistakes I'm learning from. I like that. My portfolio is about to crash. Guys, your portfolio should be invested in long-term, low-cost ETFs for the majority of you. Take 5 or 10%, go and trade it however you want. If you want to go buy crazy things, go ahead and do that. But the majority of your stuff, you shouldn't be worrying about the day-to-day stuff. This is why I always say don't get invested in stuff like ARK. ARK is technically an ETF. ARK ain't an ETF. ETFs shouldn't be down 5% in a day. That's just not what ETFs are built for. Unless you have, how do you have an ETF that's down 10% in 2 days? What the hell is wrong with these people? I mean, good Lord. Just really something. Let's see. Guess who's back? Oh, there he is. What's up, Winsy? My man. He was talking smack about me on Twitter yesterday. Somebody sent that to me. That's great. How do I short my portfolio? Ask me that in the Bid and Ask Nation too. Okay. Are any stocks discounted that you're interested? Danny, that's a great question. Yeah, there's a couple of them. Intel, eBay. I mean, the list goes on, but we are. What about dividend ETFs? So, I mean, listen, I like getting, well, who asked me that question? Oh, Dad Extraordinary. I mean, you're going to get paid a dividend from a lot of ETFs. I just don't think that you need to be in something crazy like this where you lose 10% in 2 days in an ETF. I mean, let's look at, I want to compare this to like Jets. Let's see. Okay, Jets was down. Yesterday was a pretty bad day for airlines. It was down less than 1%. Today it's getting smoked. But what's the Vanguard one? VOO? Vanguard S&P. Let's see. This is an ETF, guys. I mean, yesterday was down less than 1%. Today is down. I mean, it's basically down the market. This is what you should be. This is what you should be looking at. This kind of stuff, not this other crap that is hyping it. So, Winsy, I did not actually. Whatever. I didn't actually like compare. You do what everybody does. You just take things out of context, spin it how you want to, just like every other fake news person out there, and then run with it with your little minion. So, whatever you like to do. But, oh, Winsy, you'll like this. Your boy, he's drinking yesterday's sorrows away. I'm drinking right now to celebrate what's happening in the market. So, keep dropping, baby. Keep dropping. All right. What do I think of skills? Let's look at skills, K. SKLZ, I think it is. Mo, do you pay attention to companies' dividends? Paul will answer that question for you. I'm not going to answer that one right now. Oh, what is this? Oh, skills. They're new. How new are they? Are they even a year old? Oh, they're not even a year old. So, K, I don't trade. I don't like trading IPOs, new companies, because I like to. So the idea behind that is this is the majority of the chart that I have. I have going back to February, let's call it February 11th. So I look at that and say, I only have this much data coming out of this stock. And when I look at it, I like to think a chart is a story. It's an entire book. And when I look at this, I only have, going back to February, maybe I only have the first chapter or the first 2 chapters or something like that. So that's why I don't like investing in IPOs, early companies. I like to look at things that have over a year worth of candlestick data for me. And it's only because I just need more information and it gives me more confidence to go ahead and do that. So. Do I invest in PE? I have a couple of PE investments, but they're very small. I would rather invest in the market, real estate with Paul. I do any PE with Paul. I'm not really into like going spreading money into different funds, this and that. Just not my thing. What do I think of HLF? Let's take a look. HLF. And guys, after I look at this one, Herbalife, not Herbalife. This is, if you guys have never seen the documentary, what was that called? Guys, what was the documentary called with Bill Ackman? Oh, Betting on Zero. Phenomenal documentary. And it is about Bill Ackman shorting Herbalife because he said it was a Ponzi scheme, a pyramid scheme, and great documentary. But whoever picked this, I don't know who picked this. I can't scroll up fast enough, but good stock. I like what you're doing. Your major moving averages. I like that. Getting some nice trend going. Volume is coming in. That's great. Just get some engulfing candlesticks. So don't be deceived by the bid and ask right here. Nick or Cash, if you're watching this right now, can you please throw this in the Bid and Ask Nation, and we'll take a look at this later. Maybe we'll throw it on the watch list or something like that. Okay. I saw another one that oh, you know what I want to do? I want to pull up our Everything Money Patreon page. So guys, this is where you come to join the Patreon if you're interested, and I think you should be interested because just the value that you get is incredible. If you join, we have, of course, the Discord only level, $7 a month. If you want all of the Everything Money software, that includes the 8 pillars, that includes the real estate calculator, and it includes everything for, let me rephrase. It includes all of the software that's not going to be for the top tier. So when we get to like momentum trading and when we get to stock trading and charts and that kind of software, you're only going to get that for free if you're in the Bid and Ask Nation. You can add it on, but you're only going to get it for free in the Bid and Ask Nation. But this gets you all software, access to mine and Paul's portfolio, discounts on some merch. But if you join the Bid and Ask Nation, you get full access to me. You get access to the incredible Discord community. I do tons of seminars, private seminars only, and you get everything. You get all the software for free. I mean, it's incredible. The value is incredible. For $65 a month, you're going to make that up in one trade. That's all I know about that one. Alrighty, let's see here. Added HLF. Thanks, Nick. Let's look at Google. Good call. Let's look at Google. Google is so this is an interesting one. Oh, what's happening to Google? It's moving with the tech market. Okay, so you're getting into this area of having to be you're kind of below these you're getting into this 25-day moving average range, this purple line. So take an easy and I don't like that you're turning right here. This makes me a little bit not confident. You're not in a downtrend yet, but you could get there depending on if this sell-off continues. So keep that going. Does French fries come free with the sandwich combo? Oh, you guys are really something else. Should I cut my losses, or do you guys think the NASDAQ is going to rebound? Paul, I have no idea. I mean, I can't predict markets, so. Oh, la, 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 la. Hold on, Paul. The middle tier gives us access to the EM software, but will there be areas in the software we won't have unless we're part of the top tier in the future? I assume you mean Paul's super shorts, and there's no software that you won't have. There's no software that you won't have, if that's your question. Okay. Kanye's supposed to release Yeezy Gap this week. That's what's up. I like Kanye. Amazon entry point. Let's check it out. Amazon, I'm sure, is pulling back bigly right now. Ooh, yikes. Oh, man. Amazon dropped below all 4 of its major moving averages. Check that out. That's crazy. Look at that volume on Amazon. So, guys, when I talk about volume, I really like that. Look at this. This is good volume. I mean, it's up and down, but it's pretty consistent. If you just draw a straight line across, it's pretty much always at that volume. So draw your own straight line and see what it is. Your friend lost $1 million in stock by Tesla and Amazon too early. I don't know what that means. I'm in the Bid and Ask. Where do I get who do I ask for the software? Email help@everythingmoney.com and they will help you out. Anyone need Paul's personal phone number? Oh, Mason. Tattooed Chef, let's do it. Alrighty. And guys, if you come into the Bid and Ask Nation, you guys can ask me any of these questions you want to. I'll give you a much more thorough, detailed review. I just got to get through things. So first thing I notice, this volume sucks. That's all I know. You had a lot of selling at one point. That's it. But yeah, this company, go find another stock. That's what I would do. And remember, I'm doing this from a trading perspective. So Tattoo Chef is breaking through support. Yeah, Tattoo Chef is getting there. They're getting down to their support level. Do you use volume spikes as an indicator for momentum? So, Marcel, good question. Momentum is different. Momentum is the way that Paul and I do momentum. It's more of looking. It's more black box. If we take the Complete Turtle Trader, the book by Michael Covell, we really we're putting it into a software that we're building, and the computer is going to tell us when to execute trades and when to execute trades going long or short. There's no thinking that goes into it. All we do is buy and sell on what the computer tells us to do. So yes, volume does have a factor going into it, but it's not something that we look at on a day-to-day basis to say, yeah, we need to go and trade, do this because we're getting volume in, we're getting volume outflows or anything like that. So what's the PT for your Tesla? I don't know what that means. Oh, this is the troll. Ignore that. Netflix did not crush earnings. They were bad. And they said next ones will be worse. Oh, really? Let's see what Netflix is doing. NFLX. They're oh boy. Yeah, they had, I remember when this happened, now that I'm looking at the chart. So they had this big gap down. Guys, I mean, I have to say Netflix is the leader in this industry at this point. So maybe things can change, but maybe not now, but let's see if this gap can fill. It has, man. Guys, you need volume like these few days, or just extremely consistent green volume for multiple weeks to get this thing pushing through all of these moving averages right here. It's going to take a lot to get this thing going. And yeah. Let's see here. Okay, guys. Yep. Red. Vinny, a lot of red. All right, so guys, if you want, we have 1 p.m. live stream today. Follow Paul on Instagram. It's at Paul Gabriel, PaulGabrail. You can follow me. It's at Bid and Ask Nation, and I'll get my handle put up here someday. But Mo, thanks for the answer. Are you planning on weighting different indicators equally in your software? Nope, everything's going to be equal weighting. Disney is killing Netflix. So I can agree with usership, yes, but there's no chance that I'm going to go out and watch Disney movies. It just ain't going to happen. I mean, maybe do they have other stuff? I shouldn't have made that flipping comment. Do they have other stuff besides Disney movies and anything childish on there? Because I got Disney Plus the day that it came out, and I was looking through there. Now I'm sure they've improved it greatly, but do they have their own studio where they're making shows for adults and this and that? I just want to see. I want to see that. Also, guys, fireside chat, Patreon only fireside chat, all tiers this Friday, 6 p.m. Eastern time, and we'll go from there. Chewy, I do not have a Twitter handle. My minions tweet for me. My Bid and Ask Nation. They're my tweeters. Let's look at Apple real quick, then I'm gonna get out of here. Oh, market's open. Let's see what the market's doing. Let's see. Okay, Nasdaq's down almost 2%. So the drop wasn't as bad as it was pre-market. Let's see what happens. The wind falls. Here we go. Kathy Wood's misery mounts as ARK Investments drops below 20 billion. Oh, poor thing. I really do feel bad for her. Not. Okay. They have Hulu. You're right. Tony, you're right. Disney has Hulu. They have ESPN. Yep. Tony, you're right. I thought you meant just Disney Plus. That was my mistake. I went with that one wrong. Okay, guys. Well, we have a 1 p.m. today. I got to go to the studio to record. You guys have been great. Let's keep watching. Join the Bid and Ask Nation. Let's go make some money in this. And guys, go watch the shorting seminar. Those in the Bid and Ask Nation, go watch the shorting seminar. The reason that I did it way back when was because I want you to know how to short when the time comes. And maybe we're in that time. I don't know. But go and take a look, and we'll go from there. You guys have a great day. Peace. Oh, wait, one more thing. Go have a drink for all the trolls. Bye.